Hello and welcome to Stock Market Fever. Oil prices have been rising this past week from under $110 a barrel on Tuesday, May 23rd to close the week at over $115. This is occurring as increasing demand spotlights the lack of supply choices in oil markets. Russian oil output is expected to fall dramatically as the European Union today imposed a ban on Russian oil. The sanctions will immediately impact 75% of Russian oil imports, and by the end of the year, 90% of the Russian oil imported in Europe will be banned. With U.S. crude and gasoline stockpiles continuing to fall, and current tensions between the U.S. and Iran making any breakthrough all but unlikely, analysts are forecasting another jump this summer towards the 130 to 140 per barrel region. While all this will be painful for consumers at the pump and could lead to increased inflationary pressures and reduced consumer spending on discretionary goods and services, there is, of course, a big win possibility for oil companies and their shareholders. Will one of those big winners from decreased oil supply in world markets be Marathon Oil? In this video, we'll examine where Marathon has been over the last 3 years, what analysts forecast for its future, and you'll want to be sure to stay tuned to the end as we at Stock Market Fever wrap things up with our own summary and forecast. Marathon Oil Corporation is an independent exploration and production company focused on 4 of the most competitive resource plays in the U.S., complemented by a world-class integrated gas business in Equatorial Guinea. Marathon Oil shares have been on a tear lately, but it hasn't been that way over the last 3 years. In fact, though it closed at a record high on Friday, May 27th at just over $31 a share, it had been trading through much of 2020 in the $5 per share range. This, of course, was during the height of the pandemic shutdowns, causing a greatly reduced demand for oil, and causing oil prices to plummet, trading even lower than $12 a barrel at one point, and closing 2020 at less than $50 a barrel. And this is reflected in Marathon Oil's earnings. Marathon Oil earned 59 cents in 2019, lost $1.83 in 2020, and has come back earning $1.20 in 2021. But most of that jump in revenue growth came in the last quarter of 2021 as oil prices started climbing, and Marathon reported earning 83 cents per share for that final quarter. And the big profit surge continued into 2022 as Marathon more than doubled their stellar fourth quarter of 2021, earning $1.78 per share. And with that stellar spurt of earnings growth came an astonishing growth of Marathon share price. If you had purchased Marathon 3 years ago, you would have paid about $14 per share, and you would have doubled your money and then some based on Friday's $31 close. And even if you had purchased Marathon 1 year ago, you'd be up about the same, perhaps even more, as the stock had dipped to under $11 last August. And even if you purchased Marathon Oil this year, you'd have just about doubled your money. But where are industry analysts forecasting Marathon Oil's future? Will they be bullish due to the rising price of oil? We'll be glad to tell you in a moment, but if you like this video and would like to see more like this, please smash that like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. Thank you very much. Okay, here's what industry analysts forecast for Marathon Oil. Out of 27 analysts covering the shares, 12 rate Marathon either buy or strong buy, 13 hold, and 2 underperform. This is generally a bullish consensus, but not a strong one, as the stock seems to be trading at just under its target average of 32.76. So, if Marathon Oil has been gushing in profits and share price, why haven't analysts been raising their ratings and targets? We believe that the main reason for analysts' caution might be that they are not convinced that this latest surge in oil prices is anything more than cyclical, and are concerned that the price of oil could easily drop down past the summer driving season or if more supply comes on the market. CFRA equity analyst David Holt on May 5th reiterated his hold recommendation as the stock was already close to his target of 31. He observed that developing prospects in the Bakken Shale face above-average regulatory risk given the potential for a shutdown of Dakota Access Pipeline. But expressing a far more bullish sentiment, Zacks Equity Research rates Marathon Oil with a strong buy rating based upon the stock's strong momentum and labeling the shares a strong value stock. And where does stock market fever stand? And what is our long and short-term price forecast for Marathon Oil? We'll be glad to tell you in a moment, but if you haven't done so already, please smash the like button and subscribe to receive future actionable stock market news and alerts. Thank you for supporting our community and helping us grow. Okay, here's what we predict. While we do not offer investment advice, we gladly offer our opinion. Our opinion, Marathon Oil is a strong buy. We believe that with their main goal of returning value to share owners, but without sacrificing capital investment, is a winning strategy for both shareholders' current return on investment while maintaining future production. At the end of their first quarter, Marathon Oil boasted of having an outstanding first quarter financial delivery, highlighted by $940 million of adjusted free cash flow at 27% reinvestment rate. Additionally, they emphasized their continued plans to have peer-leading return of capital to investors with a minimum of 40% of cash flow from operations going back to investors. Their stellar first quarter report, in fact, boasted that they had returned 60% of cash flow to investors in the form of dividends and share repurchases at prices lower than what the company is now trading at, we note. And this includes their continuing to prioritize return of capital with $900 million of year-to-date repurchases and fifth consecutive base dividend raise. Additionally, their first quarter earnings report highlights how Marathon Oil executed $1.6 billion of share repurchases since October 1st, reducing share count by 11%. Includes $900 million of share repurchases year to date. And Stock Market Fever is impressed that their board of directors improved increasing share repurchase authorization to $2.5 billion as of May 4th. Thus, in short, we at Stock Market Fever are very impressed with Marathon Oil in the present and rate their shares a strong buy, as we believe that the fortune of the company and their shareholders will continue to rise in the short and intermediate term, especially since we believe that the price of oil will continue to surge. Thus, we set a one-year target price of $40 for the shares. But what do you think? What price do you think Marathon Oil will be trading at near term and in the future? Would you rate it buy, sell, or hold? Please leave your thoughts and comments below, as we'd love to hear from you. And be sure to like and subscribe to Stock Market Fever to receive future actionable stock market news, analysis, and alerts.